everyone. I'm Kate Scott-Dawkins, and welcome to the WPP Media Intelligence Podcast. A very special one today. We've been on hiatus a little bit more than more than we'd like recently, just because we've been putting together our December this year, next year forecast, which looks across 60 plus markets, all the media channels, advertiser categories. It's a huge undertaking. And I have the team with me here to discuss it all. I'm joined by Jeff Foster and Nidhi Shah from our business intelligence team. How are you guys holding up? It's out. It's live. At least when this podcast goes live, it will be out in the wild.
Yeah, no, it feels great to have that done and have that out there, living out there in the wild. But looking forward to hopefully a relatively relaxing weekend.
Yeah, same. I mean, it's not just a month's effort, right? It's such a big lead up to the report, and it's finally here. So very excited.
And now we get to share it with all of you. So that's what we're going to talk about today. We are closing 2025 with a more optimistic outlook than we held in June. We're now forecasting global advertising revenue growth of 8.8% in 2025, reaching $1.14 trillion. And for 2026, we project deceleration, but it's still a healthy 7.1% growth rate. Or 7.9% if we include U.S. political spending.
Yeah, and that 8.8% is a significant upgrade from our mid-year forecast.
It is, but it's not actually miles away from where we were last December at 7.7%. So it's primarily an erasure of the June fallout from U.S. tariff announcements, plus a boost from AI. And all the investment happening in that space. So it also ties directly into the visual theme of this report. Anyone who's a fan of it knows that I like to have a very strong visual concept for each of the forecasts, and this time it is pop art. We didn't just choose this aesthetic for its colors and sense of maximalism, although I think it's very fitting in sort of the ethos for the end of the year, but also for its economic context, right? So pop art emerged during a post-war boom of mass production and technological shift, and it sort of mirrors the economic concept of creative destruction. I think we can look at that alongside the creative destruction element that we talk about in the report a lot, and that my predecessor, Brian Weiser, talked about a lot in terms of advertising growth. It was one of the key concepts from the Nobel Prize winning economists this year, talking about how creative destruction fuels economic growth. And that's something we're definitely seeing right the way through the advertising industry, especially with AI as the catalyst, transforming traditional search, content creation, media planning, all of it, and driving growth. But really, sort of what we talk about in the report is uneven growth.
Yeah, I would say that's a key theme, that we're seeing this K-shaped recovery in pretty much most markets. So the macroeconomic picture is better than what was feared initially, with tariffs being less punitive than expected. And of course, we're seeing all this massive investment into AI. But I think the big issue is more on the consumer spending, which is highly concentrated. Like, for example, in the U.S. and a lot of other major markets, we're seeing 10% of households that now account for nearly half of consumption. So that's putting a lot of pressure on the wealthier, more affluent consumers.
Yeah, no, exactly. It's an accumulation of capital at the top, an accumulation of efficiency for corporations using AI, which can drive ad spend, right? I think that's one of the other things. It's not just companies investing in AI into these data centers and infrastructure. We're seeing it right the way through with advertisers from CPG to financial services to luxury, applying it on the back end, making AI efficiency improvements to logistics and product development and all kinds of things, and marketing, right? That then maybe frees up some of that investment for putting it into working media and reaching consumers. So yeah, the question is, even if there's growth and investment on the advertiser side, how long does the consumer demand hold up, and is it diverse enough to support the wide range of advertisers that are all contributing to that 8% growth this year and 7% next year, 8.8 and then 7.1. Well, let's get into some of the key channels and categories. We'll start with intelligence, and really what we talk about in the report is this shift to intelligence, and it's something that should not surprise people if you've been following for a while. Last December, we introduced a new taxonomy for advertising, moving away from through the big monolithic buckets of TV and digital, as it were, right, to thinking more along the lines of the motivations behind why advertisers partner with certain media owners. And so this new taxonomy includes intelligence sitting above search. So search, traditional search as we know it, is part of a new intelligence category of advertising that is all about making sure brands show up in the ways that information is organized and when people go to find something. And that behavior is now moving. It's happening in social, it's happening in commerce, it's happening all over the place. And we're starting to see it happening in more chat-based interfaces or in things like Google's AI overviews and Gemini and AI mode. So we forecast traditional search advertising this year to grow 10.2%. But we're also talking about how that might look in the future, how big AI search is going to be going forward, and really who are the media owners or the companies that are best placed to stand out and do well in this space. Like, who are those companies that are going to be offering this expanded intelligence advertising opportunity to brands? And we've created what I've called the Future of Advertising Intelligence framework to track this. And so that's really an assessment of companies in this new world. We're going to talk a lot more about that in January, but we do have some initial scores and thoughts that are in this year's report. And so we're going to be, again, rolling that out more and more over the next few weeks. But initially, what it means is that we're envisioning a future of advertising that is personalized, pervasive, and proactive. And that's going to be driving some of this shift.
Kate, when you say proactive, you mean platforms making suggestions before a user queries them, and who are going to be some of the top ranking kind of platforms in the space?
Yeah, exactly. So it's a good way of thinking about the shift from traditional search today being a mostly reactive format where someone comes, asks a question about something, and then you get an answer, right, or sponsored links, versus the potential for there to be proactive recommendations. And that's really going to depend on the kinds of data that a company has in order to make those relevant and valuable. It's going to have to be helpful and additive to a consumer in order for them to want to have those kinds of interactions. So it does really change the calculus and where these kinds of things are happening, again, because it is product discovery on Amazon and TikTok and Reddit, and all of these expanded search behaviors are going to be caught up in this new world and part of the future calculation. But that expanded search bucket, if we think about traditional search being over 240 billion or so, if we think about search within social and commerce added to that and search within AI added to that in 2026, it surpasses $400 billion in terms of that more expanded definition of search. So really interesting space that we're going to be talking more about and tracking more going forward.
Yeah, and then when looking at revenue, our intelligence category is still 21.4% of the global total. So that's over a fifth. So is that money moving yet, or again, is this more just more of a technological capability type of discussion?
Yeah, it's very much future forward. We're not seeing massive amounts of revenue, especially in 2025. I think we talked about Perplexity. It was pretty insignificant in terms of their advertising revenue. OpenAI sounds like, they're going to be focusing on some core business capabilities before they spend a lot of time looking at advertising. So we're not there yet, but always good for us and our clients to be ahead of the game in what we're looking at. Let's pivot to our overall commerce category and the big upset that's happening this year, Nidhi.
That's right. I mean, we've been talking about commerce for a couple of years now, especially since COVID, and that category now has expanded to include travel and financial services. So we're not just talking about retail media. This category is set to account for about 15.6% of total global ad revenue, reaching about $178 billion. So that actually makes it surpass TV for the very first time globally. Now, it's important to note that this is not the same across all the regions. So for Europe, if you take, for example, that kind of share of commerce is still pretty low, and it's not expected to surpass TV over our forecast period, which is very different from, say, North America or APAC. There are some exceptions to that trend, of course, with UK and some of the bigger markets, but pretty divergent kind of landscape nevertheless.
Yeah, China is really driving that big commerce number. They're the largest by far globally.
And that, again, kind of raises a point of that retail media networks have been the next big thing for 5 years. So are we going to start seeing diminishing returns yet?
Yeah, we're definitely seeing consolidation, and that growth is starting to slow down, especially with some of the bigger markets as new kind of players enter the space and advertisers really managing a ton of different media networks across that spectrum. The growth is still there. Commerce is one of the fastest growing advertising categories, with, retail media kind of growing about 11.3% in 26. But it is definitely benefiting some of the larger players within the space, like Amazon, with those kind of sophisticated offsite capabilities. I also want to highlight some of the newer networks which have come into play in the space. As I mentioned, financial services and travel. If I focus on financial services, which is one of the sectors I've worked in before, so it's great being able to now analyze these players from an advertising landscape. These networks are fairly small, about 700 million globally, and that growth is projected to be 25% in 2020, with banks really having that ultimate transaction data.
Yeah, just so people are clear, this is not a light undertaking to add 3 new categories this year in our subsegments, what we're reporting on globally and by market: financial services, media networks, travel services, media networks, and gaming all added this year. So it's been a lot of work for the team, and Nidhi, you've really done a great job of bringing those new commerce categories to life. Now, having worked in banking, know as well as anyone that there are, stricter compliance requirements, stringent controls on data and even advertising in a lot of cases. So, are there challenges to that monetization that are, more difficult than what we saw in, say, the retailer category?
And that view is the kind of skeptical view, and it's completely valid. A lot of the kind of advertising within financial services is based on trust. So it's really important that is maintained as, these kind of media networks roll out. Many countries have laws protecting confidentiality of consumer financial data, and that's why we haven't yet seen that kind of scale yet in this space. It's relatively new stream, but financial services do have an access to a lot of different types of consumer data, and not just transaction data, but also income, savings, credit history, which is all valuable for an advertiser. If I look at it, if I were a bank, and how, the space could be entered, especially with the tight regulatory environment that exists, there is kind of, the ability to anonymize data and aggregate it. So, you're not giving one kind of customer or private details about a particular individual customer, as well as, asking for consent.
Yeah, and I think it's worth noting the agentic shopping threat that exists. So, like for example, if I tell AI to buy me paper towels and it executes that trade, then does the retail media ad on the shelf even matter that much?
I think this is something that our commerce team is looking at now, right? And talking internally about what are the new standards, global standards and industry standards that we're going to have as we work through all of this. Everything is going to be touched and impacted by AI as we go forward. Let's jump into a few of the insights by region. Jeff, North America saw that big upgrade off the back of US growth in our forecast this year.
Yeah, we are looking at a 12.3% growth for North America in 2025. That number excludes any political spend. As we said, the U.S. economy has been incredibly resilient, especially with early on with that fear that tariffs would crush spending. But we've actually seen the opposite. We've seen front loading of imports and businesses adapting. And then looking down the road to 2026, we expect to see 7.5% growth for North America. We also have to factor in the U.S. midterm election cycle, which is coming up. That is forecast to generate $12.3 billion in political advertising spending, which would be a near record. It would put it close to the last presidential election and be about 6% higher than the previous midterm elections in 2022.
Yep. And LATAM, staying with the Americas, one of the fastest growing regions as well, and Brazil particularly there, right?
Yeah, LATAM continues to be very fast growing region. We're looking at an increase of 14.3% in 2025. Brazil is a standout there with growing 16.1%. Of course, we're seeing more of this is being driven by digital adoption. And there's also a very strong performance in commerce media and connected TV across LATAM.
And you also cover the automotive sector. Those two sort of came into view together, LATAM and automotive, right? And we're looking at some of that growth being or coming from Chinese overseas advertisers, both in sort of the fast fashion category, Temu and Shein, but also in Chinese OEMs, right? Like BYD in Brazil, those economic ties, especially as the US pulled back this year. China buying more soybeans from Brazil, having more advertising activity there. That's been instrumental to some of that growth in Brazil as well.
Yeah, absolutely. So yeah, auto is getting a little bit complicated and messy. We do project auto advertising to grow 6% in 2025, but there's a clear split in the category. In the US and Europe, legacy manufacturers are caught between trying to sell EVs to consumers they're hesitant to buy, and that's mainly here in North America, the US, and Canada, and also trying to maintain their share for combustion engines. But we're also seeing Chinese manufacturers, especially like BYD, being incredibly aggressive, spending heavily to gain share in LATAM, Europe, and even MENA. So, yeah, it's been interesting to see. And we've also heard some interesting intelligence that the auto sector is increasingly moving to biddable media to prove sales. But in doing that, are they losing some brand equities? Could be a potentially dangerous trade off that they need to weigh heavily.
Yeah, that theme of maintaining brand salience and its importance, especially off the back of the research that we discussed in an earlier podcast, the How Humans Decide from WPP Media and Oxford Said Business School, came up a lot as we were talking across categories and channels and how important that's going to continue to be going forward. Nidhi, let's look at EMEA. What is the growth story there?
Yeah, I mean, Europe is expected to be the slowest growing region next year out of all kind of regions we cover. We're seeing a 5.8% growth for this year, and mainly from Chinese advertisers. Jeff mentioned earlier, a lot of spending from e-commerce players and automotive players kind of being redirected towards Europe. We're also seeing robust kind of growth in retail media, streaming, digital out of home. A notable sector, which is important, especially in Europe, is luxury. It's slowing down. So we estimate spend will actually decline this year, about 1%, and before recovering next year.
Yeah, and that tracks with the China slowdown as well in terms of
Yes,
consumption.
exactly.
Yeah.
It accounts for a huge proportion of luxury demand, and that China growth is moderating, has been sluggish so far.
Yeah, we're looking at 6.8% ad revenue growth for China in 25. APAC does remain the second largest region. India is a real bright spot as well, growing 9.2% this year, still slightly behind nominal GDP growth, but they've had, again, we talk about resilient consumer sales. Their holiday spending period was particularly strong. So we are seeing that consumer really continuing to prop up economic activity and advertising globally. I want to touch on the technology sector too. That's been really, again, a story that has been focused on this China region again with the sort of decoupling between China and US trade and companies looking at whether they're moving production into other markets in APAC, for instance. But that technology sector is another growth point. We are looking at some potential hardware upgrade cycles, maybe some driven by the end of support for Windows 10, and also just again, the push in AI and new companies that we're seeing pop up that are offering AI services that are these new advertisers and contributing to growth too. Now, that's both in the form of large companies like OpenAI and Anthropic, which OpenAI had that Super Bowl commercial, and also a number of new smaller companies in this space that are all competing for growth. So we are expecting to see pretty good advertising expense growth from tech both this year and next. One of the sectors we spend a lot of time on, obviously, is media and entertainment. We're seeing that ongoing shift from linear to streaming. What else is happening in the world of M&E?
Yeah, so as you mentioned, we seem to move past the subscriber acquisition, at all costs to more profitability focus on streaming. So we're looking at for advertising to grow about 2.6% in 2025. But I think we can say that the streaming war spending spree may be over, but, we're Might be a little early on, considering with all the the consolidation going on in the industry.
Yeah. Well, we've covered a ton of ground. Retail media surpassing TV, growth across the regions, the ongoing resilience of consumer spending, albeit amongst a backdrop of increasing inequality in those consumption patterns in many markets around the world, and also the rise of buy now, pay later activity, which we saw in a lot of the markets that we looked across. And we'll have more in the coming weeks on all of these growth numbers, as well as the future of advertising forecast, and a better POV on the Warner Brothers Discovery and Netflix news, which just came out as we were hitting record on this. So we'll get to more of that next week as well. But, importantly, companies are going to be looking at, how well they're prepared for the future of intelligent advertising, looking at brand particularly and not over rotating to those short-term metrics, and hopefully continuing to listen to us for the intelligence they need going forward. Thanks so much, Jeff and Nidhi. Thank you all for listening to the WPP Media Intelligence podcast. Don't forget to subscribe. And if you have any questions for the show, you can email us at business.intelligence@wppmedia.com. As a reminder, this podcast is meant for informational and entertainment purposes only and should not be considered financial advice.